Good morning. Here's your executive financial news brief for Monday, May 18, 2026, covering the key macroeconomic shifts, regulatory updates, and market movements across South Africa, the African continent, and global markets. South Africa strained consumers, rate hikes, and capital controls. Those are the first news that I'm reading. I'm going to read the South African financial news for the 18th of May, 2026. Macro outlook and growth downgrades. The compounding shock of the ongoing US-Iran-Israel conflict has forced international institutions to adjust expectations. Morgan Stanley cut South Africa's 2026 growth forecast from 1.7% to 1.2%, while structural improvements like energy security and sovereign credit rating trajectory keep the medium-term outlook optimistic. How oil input costs are dampening corporate profits and consumer discretionary spending. The rand and unemployment volatility. The South African rand is under visible pressure, trading at roughly 16 rand 50 cents and 16 rand 54 cents to the US dollar, 22 rand 32 cents to the pound, and 19 rand 36 cents to the euro. This weakness follows grim domestic data following the first quarter official unemployment rate climbing to 32.7%, up from 31.4%, driven largely by job losses in manufacturing. And then monetary policy and inflation. Economists anticipate that the South African Reserve Bank will initiate consecutive 25 basis point rate hikes at its upcoming meetings to counter energy-driven inflation and stay back within the tight 3% target frameworks adopted last year. Fuel price verification June outlook. Mid-month data from the Central Energy Fund brings mixed news for June, while petrol 93 and 95 are looking at minor increases of 13 cents to 19 cents per litre due to previous tax relief rollbacks. Wholesale diesel prices are tracking a substantial over-recovery, decreases between 3 rand 52 cents and 4 rand 41 cents per litre, offering crucial relief to logistics and transport sectors. And then capital flow regulations and crypto framework extended. National Treasury and the South African Reserve Bank have formally extended the public comment deadline for the draft capital flow management regulations 2026 from May 18 to June 30th, 2026. Treasury clarified that the new regulations are designed to deter illicit financial flows, explicitly stating they do not intend to criminalize crypto asset ownership or retroactively penalize holders. A separate cross-border crypto manual will be released soon to provide specific transaction guidelines. And then on African financial news for the 18th of May 2026, navigating the energy crisis, the broader African continent continues to face divergent impacts from global oil sitting firmly above $100 a barrel. While net exporters like Nigeria and Angola are seeing nominal revenue bumps, sub-Saharan net importers are struggling with widening fiscal deficits and local currency depreciation. And then tax compliance and global integration. Across regional hubs, revenue authorities are closely watching South Africa's official system rollouts of the Global Minimum Tax (GMT) framework under the OECD's global model, with large multinational enterprises with a turnover that is greater than 750 million euros, facing a mandatory 15% minimum corporate tax, with other African nations are evaluating similar frameworks to protect their domestic tax bases from base erosion. And then there's also trade flows amid Red Sea or Strait disruptions. Ongoing geopolitical maritime blockades mean that the African ports along the southern route, which is the Cape Route, continues to see elevated transit volumes, though regional supply chains remain vulnerable to heightened insurance premiums and freight rates. And then the global financial news for the 18th of May 2026 read as follows. Commodities and safe havens. Global oil continues to hover at high elevated bands, trading at around $106.40 a barrel. The International Energy Agency IEA warned that global inventories are depleting at record paces, keeping the market severely undersupplied due to the effective closure of the Strait of Hormuz. In safe haven assets, gold is trading robustly, hovering around the $2,470 per ounce range, with localized indices pricing spot gold near $4,699 per ounce under varied weight measures. As institutional order flow heavily favors physical gold over fiat exposure and heightened inflation. And then there's US-China diplomatic climax. Global financial guests are closely monitoring the final day of the high-stakes summit between US President Donald Trump and China's Xi Jinping. The US dollar has recorded its strongest weekly gains in 2 months, further bolstered by the US Bureau of Labor Statistics reporting consecutive monthly rises in consumer prices CPI, signaling sticky global inflation. And then lastly, equity and bond rebalancing. Major global equity indices show a cautious risk-off tone, with the JSE Top 40 tracking international losses down over 1.4% in recent sessions. Meanwhile, fixed income yields are taking closer financial news for the 18th of May 2026.